Hello and welcome to this stock analysis. Today's stock is Indian Oil Corporation, Indian Oil IOC, OMC giant. Now, looking at the starting with the quarterly chart, from an investor's point of view, stock has had lots of journeys of up and down. You can see that major heavy pullback during the subprime high, but then it took around 5 years to stable from 2008 Jan to 2013 October, more of a sideways pattern. So investors did not make much money. 2013 to 2018 super rally, 17 October rather, quarterly charts. That's almost end of 17, and then 3 year pullback, 18 to 2020 pandemic low. Since then, yes, steady start and not any major correction in the stock since then. You can see nicely the Ichimoku baseline having gone totally flat from Jan 24, keeping the stock sideways for the full year, almost just into the last month of 2024. Totally sideways Indian Oil in the quarterly chart. Quarterly support coming in at 120, 35 and 125 and 110, with resistance at 180. The November candle being pretty heavy duty out there, this quarterly candle. Now, coming to the monthly chart, you can see that there was a sharp breakout at 85, which saw a super duper move. That breakout has not seen any pullback. It is not mandatory to have a pullback, but to be noted that this has not done. Normally, stocks after a breakout tend to do pullbacks, consolidate, and then rally. This one has done superb move, and like I said, from Feb, nothing. Sideways traders, investors not making any money in it, in this sideways pattern. The monthly support coming in at 125 matches with the quarterly, and the resistance at 180 again matches with the quarterly chart. Also, you can see the flat baseline in Ichimoku is not letting the trend move forward. The flat base will not remain flat anymore from January. This is the last month of flatness for the stock. So we could see some trend emerging out of it, either up or down from towards the end of the month. Let's have a look at the weekly charts. Weekly at the Ichimoku cloud, taking a cloud bounce from here. So inside the cloud is considered in Ichimoku very volatile area. The weekly support coming in at 135 and then 130, this prior swing low out here. Resistance is all the way near the top end of the cloud at 155, and then matching with the monthly and the quarterly charts at 180. Now, before I go down to the daily charts, something I would like to share with you all is the performance of the stock IOC, which is a part of the Nifty Next, with the Nifty Junior Nifty Next index. So you can see the index has done remarkably well against the stock, as we know that Nifty Junior has done superbly well this year 2024, but IOC sideways. So the out underperformance of IOC and the outperformance of Nifty Junior continues, which is now coming towards a strong bearish harmonic ABCD resistance between 525 to 540. That's an area right now at 510, which could see IOC slowly turning around and again trying to dominate if it manages to do that. But failure to hold, if this continues to rise above 555, then IOC will be an underperformer in its index. If it turns now only, it's at 510, then a confirmation would come only after we see a ratio chart on a daily basis closing below 490.95. Then we would say yes, IOC is again dominating and again doing well. Now, one more interesting aspect is I'm trying to compare Indian oil with crude oil, the MCX crude oil data. You can do it with US oil or UK oil, Brent, WTI, as you like. But here I'm doing it with the MCX, and you will notice one thing. Most trader, most people think, oil price is down, good for the economy, market will do well. Indian oil, which, because the government controls the price of crude, will also do well. Crude goes up, government will control the price of crude, Indian oil will not make money. But it's actually the contrary. You can see right from the MCX data of 2016, you can see crude going up from 2017 to 2000. This is the only exceptional area, 17 to 18, where Indian oil declined as the price of crude went up. But otherwise, you see, when crude corrects from 2019 till the pandemic low, so did Indian oil correct. Now look at, from the pandemic low, look at the rally in crude till May of 22, and we had a solid up move in Indian oil. Again, you see the dip in crude. So do we see. There's only a small exception again here, where Indian oil has done better from September 22 to June 23, and that is primarily because of our cheaper imports from Russia of crude that helped. But again, you see now, once this small dip. Now look at the fall in international crude prices from June 24, which has been quite steep. And you can see the crack in Indian oil price also from there onward. So it's quite evident that international crude prices and the equity price of Indian oil, or all the other OMCs, are more or less in the same direction, except for a small phase which we saw uh, taking place in June 22, 23, and then when 17 and 19, which was opposite to this. So otherwise in line. Now let's go back to the Indian oil chart. Now in Indian oil, in the weekly, we can see a double top formation, Feb 24 with September 24, pullback, double top, and a breakdown from there. Now if this breakdown in the weekly continues, it doesn't hold 130, then there is a possibility that it can come down all the way to this breakout area of 88.90, which I had highlighted in the monthly chart. If you see, this breakout would be retested, but for that, 130 needs to be broken convincingly. When you slip below that, then it happens, otherwise no. Now in the daily chart, 135 and 130 precisely are the two support levels, again matching with the weekly. Resistance in the daily is much closer, 142, the Ichimoku baseline, and above that at 150, you can see out here, March 24, May 24, again, that election thing out here. It's, each time this level has held. So 150 becomes the next big hurdle above 142 for the stock. Above 150, the stock will start giving you a good momentum towards 165, 180, and so on. Start getting better. Even in the Nifty Junior ratio chart, we would see much, much more improvement once it starts playing up, trading above 142. Gradually 150, yes, but below 130, you can see there's nothing to stop and hold the stock. The pressure would be tremendous. Now, before I go to the hourly, the derivative data, futures derivative data of Friday, November 29th, saw short covering of the stock, and so has the last 5 days of data in the future segment showing short covering. So there is steady short covering taking place, which suggests that 130.35 is a strong support area for now. In the option data, 140 call and put have the highest OI for December, and after that 130 put and 150 call. So once again, 150, 130 playing an extremely important role for this stock. Let's look at the hourly thing. You can see trying to push its way above the Ichimoku cloud has failed to do it. 140 to 145 would be interesting if it pushes its way up here. Support at 135, max to max 132, 132.30, very, very crucial in the hourly. But if it pushes its way down to 135, then the stock could be take a lot of time to turn around from there. Ideally, from a strong point of view, should stake out 141 to 145 soon, and then consolidate and try to push its way up towards 150, 165, like that. So that's my outlook on it. Disclaimer: please do not consider this as a trading advice. This is purely a educational video based on the study of Ichimoku and harmonic trading patterns. Kindly do your research properly before taking a trading and investing decision. I hope this video is of help to you. So please do like it, share it, and do follow me for regular stock ideas. Until then, happy trading and investing.